Had a good week in the markets. What we're going to do is I'm going to take you through my charts, just talk to you a little bit about what it is I'm looking at for the week ahead, how I'm going to play the markets, and hopefully that will give you guys and girls some ideas on how you want to go about managing your own portfolio and your own trades. Okay. So what we're going to start off by doing is we're going to take a look at my currency scorecard, because generally the way that I trade the markets is I like to have a little bit of a directional bias when I'm getting into the market so that I understand generally where the value is, and then how I want to trade it. And then, of course, we'll look at some of the shorter term technicals that could trigger our trades, either from a strategic perspective, so in the direction of our longer term view, or if there are some shorter term tactical opportunities, then we'll look at those as well. So if we take a look at the scorecard at the moment, really, as you can see, across the board, if we look at the Aussie, the CAD, Euro, Pound, Yen, they're all pretty much in the same position. So I would say that they're neutral as far as a directional bias is concerned, which means I'm not expecting anything in the next few weeks from those particular regions from a purely economic perspective to drive the markets. Now, that's not to say that there won't be any moves driven by those regions. For example, in Europe at the moment, we've got a lot to do with the war in Ukraine. So how that plays out is obviously going to affect the markets. But from the longer term fundamentals, the way that the central banks are approaching the markets at the moment, it's fairly neutral. When it comes to something like the Swiss franc, that I'm quite bearish towards, and we can see that the rest of the market are as well. So if we look at the positioning here, we've got a number of negative 38, nearly 39,000. From a US dollar perspective, that one really, even though over the past few weeks we've seen that it has lost some ground, it is pulling back to some key areas of resistance in the pairs of things like the Aussie dollar, Euro dollar, for example, where we may see a little bit of a bounce, which means that essentially with the US dollar being the quote currencies with these, we will see some, or potentially we will see some strength. So that's sort of like my broad view, if you like. Now, what you're going to see when we jump across to the charts, which we'll do that now, is you're going to see that a lot of the moves have sort of like been contrary to that particular view. Now, that's not something that doesn't happen a lot. Of course, in every market, it doesn't matter which direction the market's moving in, there are going to be pullbacks, there's going to be profit takings. The key for us as traders is to try and understand which particular move is profit taking. Is it just a normal pullback? And when is it that we're starting to see a bit of a trend change? Now, if you look at the charts, and we'll start off by looking at the Aussie dollar, but you're going to see that this is pretty consistent across the board. We're pulling back to levels now where we're sort of like at the final bit of resistance. So an area, if you look at the daily chart down here, I initially had this support level, previous support back on the 19th of April coming in. I thought that potentially could be resistance. It did start to act as resistance at the beginning of the week, but then on Thursday, the market broke up in a big way. The market has sold off a little bit on Friday. So from that perspective, it could be that this still does play its part as resistance. But just above there, so if you take a look and we go back to the 13th of February last year, we've got another resistance area. So when I say that this is the final stand, if you like, at least temporarily, if we look at this market, we've had a big downtrend from literally the beginning of, let's say, beginning of October, which was essentially the election rally, if you like. And then we've had a pullback pretty much since the beginning of the year. Now, if you look at the scorecard that I just showed you, I'm still quite bullish on the euro, on the dollar, the US dollar. So I still think that we're going to see we're going to see a strategic position come into play. And we're going to see that the dollar does start to strengthen again. I know that Trump is doing a lot at the moment, which is bringing a lot of uncertainty to the markets. But I think that once all of that plays out, and it does, I've been doing this for nearly 2 decades now, and I've seen the markets get caught up in the short-term news only to then see the longer-term direction come back into play. And I think that's what's going to happen here. But we still have to be conscious of the fact that, the technicals are telling us something different. So we can't just trade with the fundamentals, because then you find yourself in a situation where, you're holding a position for much longer than you want to hold. It's not to say that the fundamentals won't play out in the end, But who wants to hold a position for 2, 3, 4, 5, however many months? We want to make money in the short term, because when you deploy your capital in a position, that means that that's capital you can't deploy elsewhere. So we need to be quite strategic in the way that we manage our portfolios. Okay. So going into next week, if we look at the Aussie dollar here, we can see that the Aussie dollar's pulled back to this previous level of support. Now, as I said, I'm looking at this area over here. So the 0.6438 as being the really the big level, the big resistance level where I'm going to take a sell from immediately. Now, if we look at the 4-hour chart, so if you're looking very, very short term, okay, or even if you go shorter than this, there is an opportunity to be buying from support up into this resistance area. I just wouldn't necessarily be buying through that area. I'm not anticipating, I'm not expecting a breakout there. It's not to say that it won't happen, but that's not the way that I'm going to manage these particular positions. So I'm still bearish on the Aussie dollar. I think that if you look, going back to the scorecard, we can see that the Aussie dollar, now this was much more negative going back 4 or 5 weeks ago, but it's come to sort of neutral territory. But if we look at it in comparison to the US dollar, the US dollar is still a lot stronger. So from that perspective, that's why my longer term positioning is going to be selling into the rallies, which is essentially what we have here. Plus, the market has been moving up for quite a while here. So I do expect some sort of a pullback. Now, the way that I play these markets is I'm not looking for the market to come all the way back down to these lows in order for me to be able to take profits. And I'm getting in there and I'm looking for a fairly short-term opportunity, which is why these things play out and why they're so profitable. Because unlike a lot of the retail market, let's say, where they're looking for the big swings like this, that's not what I'm looking at. I'm looking for a very short-term 2 ATR. So the ATR here is 57, 2 ATR, let's round that up to 60, so it'd be 120. So I'd be looking to sell from this area here with a stop loss of 120, which puts me in up there, and then a take profit of 120 as well, which just brings us in down below this level over here, which, as you can see, it gives us a very good opportunity to be able to make money, even in the instance where actually we say that this is a bit of a trend change and actually the market is going to start moving in a different direction. We'd still be able to make money from this, just because we're looking for a smaller reaction to a bigger level. Now, if we move across to the euro dollar, you're going to see that this is playing out a lot across the board. So I've got these are correlated currency pairs anyway, but we're looking for very similar opportunities. Now, the euro dollar in some ways is a better opportunity, with the caveat that if there is any progress with regards to the war in Ukraine, then we are going to see some euro strength. But if I look at what I'm expecting, or some of the analysts are expecting, they're saying that parity may be somewhere that we could visit at some point this year, or certainly going into the beginning of 2026. Now, that sounds like it's a long way off, but the reality is that the markets, they need to accept the current level, and then they'll make their way down to that level. So from a shorter time perspective, how we want to take our trades is essentially, I've got a resistance area over here, which I'm looking to sell from. I don't need it to go all the way down to the support level over there. Again, you're looking at your 2 ATR. So this is 77, round that up, 80, 160. So from that perspective, you can either be taking a trade from where we are right here. Now, it went halfway towards the profit target last week when we sold from this, but then it pulled back a little bit. So we're sat in a little bit of profit at the moment. If we go to 160, you can see it just brings you up towards this level over here, where you might initiate a second position. And then on the way down, we don't need to revisit the lows in order to be able to take profits. We're just looking for a short-term reaction to this particular level. Now, if you're not confident selling right now, what you can do is you can take a look at the upward sloping trend line, which is more visible here on the 4-hour chart, and we can wait for that to be broken. And you could even wait for the moving averages to roll over as well, and sort of take a price action play where the market is selling off like so, pulls back a little bit, you draw in a trend line like that. And then when the market breaks down for its second attempt on the way down, because you see that we've got 2 attempts over here, then you would sell into that. Now, one of the things that I like about the euro dollar, which actually talked about last week, was the fact that if you look at the Aussie dollar, this broke out to new highs, okay? And this was what we were talking about last week. If we look at the pound dollar, that broke out to new highs. But the euro dollar itself, even though it did rally, it didn't break out to new highs, which is a bit of a bearish sign for this particular pair, which is why it's one of the ones with the caveat there. If there isn't any progress with regards to the peace talks in Ukraine, that may completely throw this one, out of the window, so to speak. So it isn't something we consider. But that aside, I think that this is probably one of the better positions to look at going into next week. If we take a look at the pound dollar, and so pound dollar is reacting to a previous level of support over here on the 7th of August. Again, from a scorecard perspective, if you remember, the pound is pretty neutral, but what it is we're looking to play the dollar strength in all of these for the coming weeks, at least until some of the fundamentals change. And it's not to say that you couldn't take some short-term tactical opportunities like I showed you in the Aussie dollar earlier. But from a longer term perspective, when I look at these markets and I say, can I see it in the coming weeks? Do I think that it's just going to go from, for example, one spot, 2.6, where is it right now? 2.632, and move up towards one spot, 3.000, without initially coming back even to attack this trend line over here? And the answer is no. I think that there is going to be some sort of a pullback, even though it looks like things are rolling over at the moment. Even in an uptrend, you are going to get pullback. So it's that I'm looking to take advantage of as well at the moment. So a little bit of profit taking, even if it isn't the bears coming back into the market to push this down towards the previous lows and indeed new lows. If I then move across to the New Zealand dollar. So New Zealand dollar, again, exactly the same sort of thing here. So we've got the market pulling back to, and this one, if it loads, it's all the way back here in October of 2023. So more than or nearly a year and a half ago there is the current level that we're looking at. So from that perspective, I am going to be looking to sell from here, and you guys can do the same. If you aren't already in the markets, what I would say that you look to do is you wait for the trend line to be broken just to confirm the move there, so that you confirm that you don't have a bounce from this trend line. Because what could happen if we're going to get a little bit more dollar weakness going into next week is you might see that the market starts trading up towards this area over here, okay, at the 0.5851, although the Reserve Bank of New Zealand obviously cut interest rates last week, so the interest rate differential there is on the side of the US dollar. So from that perspective, that's something that when you're swing trading and you're trading longer term, you need to look into that, because that's going to cost you money, right? If you're on the wrong side of the interest rate differential, then it costs you money to hold that particular position. Whereas if you are on the right side of it, which tends to be the way that the market goes, you also get paid for holding that position, because you get the positive carry, which is what we would have here. So yeah, looking to sell from this level, you could wait for this trend line to be broken, or we can wait for the market to pull back up towards a 0.5851 area over here, and then look for another sell. Now, when it got up here, I wouldn't be, or when it gets up here rather, I wouldn't be waiting for any confirmation. I'd literally have an order, and if it breaks through this level, to sell at that level there. Now, if we do break to the upside, there might be some short-term opportunities, okay, to look at this and to say, well, I'm going to buy through resistance for a short-term tactical opportunity above sort of 0.5774, with the view to get out of the market way before you reach this level at 0.5852. Okay, so as the market breaks up there, you could take a short-term tactical opportunity as it approaches this level. Don't wait for it to get up there. So don't wait for top tick, get out before there, and then look to reverse the position and getting involved in the more strategic, the longer term position to the downside, which that's our current view. Obviously, things can change next week as more data comes out. That's something that we have to pay attention to. But if you look at the COT numbers, so the market positioning, all of the positions that we're looking at is pretty much aligned with the rest of the market, with the smart money, so to speak. So that's something that we want to look into. Long dollar, short against everything else, which will come into play eventually, even if initially it's moving against us. Okay. And it's these times that you have to have a little bit of courage as a trader. When it looks like everything's going against you, retail traders are like, oh, the trend has changed. They trade very short term, and then they find that they get caught in a position which moves against them almost as soon as they get into the position. And that's just because they've been trading the shorter term trend. And then when the longer term trend starts to kick in, they get caught the wrong side of it. So just be a little bit careful when you're approaching your positions at these sorts of levels here, because I understand what the temptation is. I used to do that quite a lot. I used to get caught quite a lot. But now that, I'm a little bit more laid back with my trading and I don't really entertain the shorter term timeframes as much, it's not something that I pay attention to. So, okay, looking at the dollar CAD. So last week I said that if we break below this level, I could see us coming back towards the next big support level at 1.3942. We broke through that level. The market has just moved sideways. So from that perspective, I am still thinking that if we get a break below 1.4140, it's a tactical short that you absolutely should be getting involved in. However, if the market closes on a daily back above this level, so above the 1.4264, then that's going to be a very, very bullish sign. And again, looking at our scorecard, that would align with our longer term view. So that's something that we're waiting for. So we've got both the strategic, the longer term opportunity to buy, which would be above this level over here, or if the market were to sell off, buy at support at 1.3948. Tactical opportunities below at 1.4143. And essentially, as I said, that's the way that I would be looking to play that one right there. I really wouldn't be surprised looking at this big negative, this bearish candle over here and the sentiment around this. I wouldn't be surprised if we do get a move down towards that level, but I think in the long term, very much a buy. If we look at the COT data there as well for the Canadian dollar, it's one of the most negative out of all of the different currency pairs. So that's something that, from a market positioning perspective, is something that we certainly have to consider. Then we come into the dollar franc, which is my sort of favorite long-term portfolio trade, if you like, for 2025. So I know that over the past few months, this has been moving sideways. It has been pulling back a little bit, but this is the pair that in 2025, at least until things change, I'm going to be long this pair. So I'm building into quite a large position in the dollar franc for the moment anyway, because I feel that the dynamic here, when you look at interest rate differentials, okay, I think that really it is something where we're going to see over the next 6 months, the US dollar is going to take hold, because the Swiss franc has had a little bit of strength, okay, but I think that's more sort of like safe haven flow more than anything else. When that starts to weave its way out of the markets and the bigger fundamentals come in, then I really do think that we'll be looking to take this and we'll have a nice continuation of this uptrend that started in September of last year. I think that will take hold again. Now, as I said before, I think it's easy for retail traders to look at this and think, oh, it's moving sideways and the market is just going to sell off. One of the things I would say that you need to do is really learn to take a step back from the market, try and remove your emotions and look at the longer term positioning. And we can see that this is a big uptrend. And although maybe it sells off from here, looking at the fundamentals, it's unlikely. And looking at the general dynamics of the market, it's far more likely we get a move to the upside from somewhere around this region here, then we get a big sell-off. Now, the final one is the dollar yen. So the dollar yen here is a bit of a tricky one. So we know that the Bank of Japan are looking at tightening their monetary policy, which means that we're going to get a swing in the differential, towards Japan. Although we have to appreciate that any sort of like tightening of monetary policy from their perspective isn't the same as what it is over here, in Europe, let's say, or over in the US, and that it's unlikely you're going to see interest rates get to 4 or 5%. So even if they start to hike interest rates, the differential is still probably, for the moment anyway, is going to be on the side of the US dollar. So, that's not to say that we don't see a big seller from here. It just means that this is a little bit of a tricky one to play. I remember going back to 2008, or actually just after then. Let me go back here if I can. Might have to go up to a weekly. But there's a similar sort of dynamic. It was actually the unwinding of the carry trade back then. So you can see you had like this big down move over here. And that was, again, at that particular time, I couldn't see it. So I got caught the wrong side of this on a few occasions until eventually we got the right side and we were able to recoup the losses and then make some profits. But in the short term, we got caught the wrong side of it because we weren't paying attention as much to the technicals. Now, we won't make that mistake now. So from that perspective, I am a buyer of the dollar yen, but at this level over here, 148.50, if we were to break below that level, then we need to readdress, reassess the situation and say, well, actually, we don't necessarily want to be long at this level. Maybe we need to look at shorts or just come out of the market completely and look for the more obvious opportunities out there. Okay. So that's kind of my view on the markets for this week. Essentially, I'm looking at dollar strength coming back into the markets. I've been saying that for a couple of weeks now. The market has continued to defy me, but that's not a problem at all because what we're looking to do and the way that I approach the markets is I look to build into what we call portfolio of trades rather than just taking the one and that one trade either making you money or losing you money. We're building into a trade idea, which is much easier to trade if you're looking at a longer term theme, if you like, a longer term story driven market. That's something that's easier to predict. The difficulty is, of course, you need a lot more patience with it. But I found that, at least for my own trading, that's been much more effective. So I want to thank you all for watching. If you have any questions, as always, please let me know. Otherwise, yeah, thank you very much. Are there any questions?
Thanks, Alex. Alex, this is live streamed onto a lot of social media. So some of the questions, if you're asking, may not come directly into you on the Zoom. So it's more likely they'll be there. So you won't get a heck of a lot on this session, I wouldn't think. I think Gary's asking about Germany elections. Any thoughts on that?
Not really. I mean, I think that there are bigger things in play there. It will be something that's fairly temporary in nature. Remember, Germany is only, one part of a bigger economic region. So from that perspective, I'm not focusing that much on it because even whatever the outcome may be, it would be temporary in nature from my perspective. It's not going to drive the direction of the euro.
Cheers, Alex. Thank you very much. And everyone, thanks for joining us for the Sunday Weekly Market update for this week. Alex, thanks for coming on.